Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. What's going to happen in the global economy this year? We could be asking the impossible, but if anyone can answer it, it's Fear and Greed's resident economist, Stephen Koukoulas. We've called him in from his holiday. You'll always find him at thekouk.com or on X using the handle thekouk. This morning you'll find him with us. Stephen, welcome back to Fear and Greed.
G'day, Sean. Happy New Year.
So where are we going? Let's start with the US, the big story, and there's so much in that, quite outside economics with the political side of things as well. What are we going to see?
You're quite right. It's hard to articulate exactly what Trump and Musk will do. I think we've got to include him into the picture because it is DOGE, the Department of Government Expenditure. So there's going to be a few things happening if Trump's even half true to his word, and he probably will be. There will be an escalation of tariffs through the course of this year, which will have implications for US consumer prices. It'll have implications for global trade. That'll be driven by the US, and that's part of the situation. You are going to have a fiscal contraction. If Musk delivers half of what he's going to do to slashing public service spending and government demand on things that he and Trump probably think don't matter, that could well be a significant subtraction from economic growth from government demand being held back. But then, again, like the three-handed economist I am, on the other hand, we've then got the probability of company tax cuts coming through, and Trump's wanting to get the company tax rate down to 15%, so an incredibly low number, hugely costly to the budget. So you've got this stimulus from tax cuts, you've got the distortion on global trade from tariffs, and you've got the contraction on the economy from cuts in government spending and public services. So that's that background. And don't forget, the Fed's already cut interest rates a lot. The rate cuts through the course of the latter part of 2024, they're still to impact on bottom line economic growth in the US. They're a positive for growth. So you put all that into the great big melting pot of US economic outlook. It's still one where the growth's probably going to be okay. The unemployment rate stays low. Inflation might not fall much more, and that's probably a factor that's feeding into some of the bond market reaction of recent times, that back up in yields. Not many more rate cuts from the Fed, probably. There might be a couple more during the course of the year, but I think the bulk of the monetary easing's already come. And the US will, as the dominant economy in the world, will probably be growing at a reasonable, steady pace.
Okay, so that's probably good news, I would say. And what about China, which of course is our biggest trading partner, all important for us?
Well, China's been weak, unambiguously weak. And we've seen that in Australia's terms of trade, which have sort of come off about 15 or 20% over the last few months. Some of these commodity price falls have been quite big, and some of the export volumes have been a bit weaker. So if you look at the trade balance between us and China, the surplus that we run with them is shrinking. Now, they realise that. They've got the beauty of being a one-state government. They don't have an upper house to deal with or an opposition or these sorts of things. So what they say in terms of policy reform, they just do it, which is lovely, or from that perspective anyway. And so we saw it again at the end of last year. We saw a number of interest rate reductions to the extent that they've got a monetary policy system. It's different to the Western world, but nonetheless, they're lowering interest rates. We've seen fiscal stimulus measures as part of the plan to sort of get the economy growing at nearer 5% than 4 or 3%, which was probably going to be the case had it not been that stimulus measure. So if they're right, if these things gain some traction in the Chinese economy, that the first quarter, maybe the first half of the year will still be a little bit soggy. But if these things get their traction and the US, in its wisdom or in its strength, actually provides a bit of a kicker to the Chinese economy, tariffs just for the side at the minute, we could see the Chinese economy doing okay. On the back of that, Australia gets a bit of a free ride in terms of a bottoming out of the terms of trade, a little bit of a pickup in exports, a bit of a pickup in our national income from that stronger Chinese economy.
Okay, what about Japan? We don't talk a lot about Japan, but very important trading partner.
It's an important trading partner. It's still, I think, the fourth or fifth biggest economy in the world, despite the problems that it's had for many, many decades. Yeah. They are certainly the odd one out. They're tightening interest rates over there because they're finally, after decades of deflation, the economy basically going backwards, they had a little bit of a success, I suppose, in that, quite phenomenal stimulus, both on fiscal policy, government intervention. They own half the stock market, the government. It's a really crazy situation there. But it's a good sign. It's a bit of inflation pressure coming from an economy that was experiencing deflation. And to the extent that they get a little bit of momentum, offset by a slight tightening in policy, that if Japan grows and records, 1.5% GDP growth, which for Japan's actually pretty good, our major energy exports, coal, gas, these sorts of things would actually get a bit of an upside too. So Japan, it's all looking reasonably good, which I'm sure you're going to ask about shortly, and that's Europe.
Yeah. So I was going to say, US, China, Japan, probably the three most influential economies on ours. You're kind of telling me they're all okay. Europe, hit me.
Europe's the bad card in the pack. It's a shocker. They're going through incredible transitional problems through the German economy not being able to compete. Its manufacturing sector's in decline. There's political turmoil. We saw that in France. We'll count the UK in Europe, even though they're not strictly. But the UK with the new Starmer administrations going through a whole hodgepodge of fiscal, again, a little bit like the US is about to go through, fiscal consolidation, but also trying to implement a whole lot of reforms that they want to do. So there's that push and pull from the government sector there. And you look at the whole European dynamic and it's really weak. One of the things that's been evident in the latter part of last year was the decline in the euro. Investors are putting their money where their mouth is. The European central banks cut like crazy. They're going to cut. I think they're going to cut a whole lot more. I think the futures market's got a cash rate for the European central bank 2% or less, something like that through the course of this year. If that is the case, the euro gets hammered, which of course is a bit of an automatic stabilizer for the economy, but it'll need every bit of help it can get. So Europe's probably just going to be lingering at this sort of barely positive economic growth.
Thank you for joining me this morning, Stephen.
Thanks, Sean.
That was Economist Stephen Koukoulas. You'll find him at thekook.com or on X using the handle thekook. This is Fear and Greed's Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fearandgreed. I'm Sean Aylmer. Enjoy your day.